Hey everyone, let's stick with us versus herd. Now, before the election results start to come in, polls start to close, I wanted to drop a video and just kind of explain in detail kind of what my agenda is here, what I'm looking to do in terms of trading, and how we're going to come out of this and make money. Now, before I get into that, I did want to say that no matter who wins, whether it's Republican or Democrat, as traders, we're all on the same side here. We all want to make money. We all want to be on the winning side of the trade. So let's concentrate on that. No matter who wins, let's try to focus on the trades. Let's try to focus on the market. Let's try to focus on what we can do to make money in the future. So let's get into the charts right now. If you made money today, comment below, got paid. If you lost money today, comment below, learned a lesson. And if you could do me a big favor, hit the like button on the video. It would help me out. Definitely pushes the video. So thank you so much day in, day out for supporting me. Today, for myself, and I'll talk about what I'm going to be doing for the election here, but kind of go over my P&L. The market is closed, so I only traded futures, so my realized gains are gone, but essentially just showing my P&L on the day. Now, last night I was stopped out. I was down about $170. I did come back to only being down $14 on the day. I made some money in the Qs, in the NASDAQ mini futures, and I made some money. Well, I lost some money. I was down a lot more on the mini S&P futures. So that's essentially what I did today. That's mostly what I traded. And, I kept my risk relatively low. I mean, if you're looking at SPY today, we had a whopping opening here. We just moved way up from 333 all up to 338 in the first 45 minutes. We just kept going. I kind of just chilled. And what I was doing today, I was just kind of going low and slow. I shorted in here the S&P and I wrote it down. And then I also shorted the NASDAQ and wrote it. This is where I made my money shorting. After we made this run, I missed the run because I'm like, I'm not sure exactly where it's going to go. We're going to have some news, but it was a relatively quiet day. I mean, the news places like CNN, Fox News, CNBC, ABC, CBS are all starting to report news right now. Polls at this time of this video have not closed yet, so we're not going to get any numbers. So I just wanted to kind of share with you kind of what my idea is here moving forward. Now, SPY has a pretty big range. Right now, it's plus or minus $9.50. So we're expecting about a $10 move. The market's expecting about a $10 move by the end of day tomorrow. Like we said, we don't know who the winner is. We don't know what's priced in, what's not priced in. All we can do is look at what the price is and see how the market reacts. We don't know if a Biden win, the market's going to tank. We don't know if a Trump win, the market's going to go up. We don't know. Nobody knows. Nobody knew 2016. Nobody knew before that. Nobody knew in 2012, 2000, whatever the case is. And if a winner is not declared tonight, then we're going to have a little bit of uncertainty, and the market obviously does not like uncertainty. There's a lot of uncertainty already with coronavirus. There's a lot of uncertainty. We don't need uncertainty in the election, so that will drive the market down if there's uncertainty in the election. And back in 2000 when you had Bush, I mean the winner wasn't declared until December. So it is likely that, well, not likely. I don't know if it's likely or not, but there is a probability, there is a possibility that the winner is not going to be announced tonight. Back in 2016, it wasn't announced on the day of. It was announced the next day. So, we'll kind of see what happens. But right now, what I'm looking at on SPY, we're looking at a $10 move to the upside or the downside. Well, that's what's pricing it. I don't know if it's going to go be above that or it's going to be flat. But right now, what I'm looking at on SPY, market's pricing in, it could go up to like 346 or come down to 326 just down in here. What I'm looking at is, the market recovered pretty nice. It bounced off of the 323 area, which was the buy zone before, came up, but now we're hitting some rejection, almost came up, almost tested the 50-day moving average. We are now below the 50-day moving average, so that does concern me. It did close below today, the 10-day moving average, or right on the 10-day, so that is concerning as well. So this could definitely push lower, and obviously uncertainty is going to make the market most likely go lower. I mean, we had a nice rally today, but considering, it just didn't get back up enough. I mean, we pushed, a couple weeks ago, we were at above 340, and then we dipped all the way to 321, 323, and now we're back up to 336. So we're seeing some wide swings in the market. So I'm concentrating mainly on one trade at a time and just going low and slow. I'm not trying to over trade. I'm not trying to just put up a bunch of capital. Right now, I'm concentrating on one trade at a time and just going low and slow. Now on the Qs, the NASDAQ, rather interesting in here. We dipped below 270, came back above. I mean, it's been holding anything above 270 is pretty nice, but there is some resistance here at 279. Again, we are below the 50-day. We are below the 10-day moving average as well in the Qs. And right now, the thing is about the Qs, I mean, they're up pretty big on the year. Unlike the S&P, I mean, SPY right now is barely green on the year. I mean, if we dip down 10, 15 points, we're going to be right on the year. But the Qs, they're up. I mean, it's up pretty healthy. I mean, at the start of this year, we started at 214. We're at 274. So there's a nice wide window here that we can dip below and still be green. However, S&Ps, if we dip below too far, below 320, we're gonna be in some trouble. So right now, we're in the last quarter of 2020. We had the election. So what you don't want to do is go all in and say, oh, just screw it and just kind of be, right now you want to use, the momentum here to make small trades, be precise, wait for good setups and not get too aggressive. That's what they want you to do. They want you to lose your money. We don't want to lose our money. We want to keep our money. It's called us versus herd. The market wants to take your money. We need to keep our money. So go low and slow. Like today, sure, I could have made a lot of money, but I went low and slow. I was already down before the market even opened. So clawing back to almost break even was, essentially in my book, a win. And I didn't really want to pile on into power hour today. But looking at the Qs again, I mean, this could test the expected move for the end of the week here is $10 on the Qs. So it's looking at 285 or 265 by the end of the week. And there's a couple things. Obviously, this week we have the election, but we're also going to have, starting tomorrow, the Fed meeting. And then on Thursday, the Fed rate announcement. Obviously, we're looking at the rates not being changed, but you never know. Maybe Jerome's like, hey, we're going to raise rates. I don't know. I mean, most likely not, but that's currently on deck. But obviously with the Fed being in play, volatility might be a little bit higher. Now volatility, VIX, if we're looking at VIX, I mean, it was kind of crazy today. I mean, at one point it was making a V-shaped recovery and then it died. And then it's now making a massive comeback right at close and into right now. I mean, we're right back up here. So, just be very careful. Very choppy volatility, VIX, very choppy. We could go either direction. If you're a bull or a bear, you don't want to be overconfident. You just kind of want to take it one trade at a time. I mean, if we're looking at stocks like Apple was struggling around under 110. If you look at the 1 year, anything below 110, it was going to be some big trouble, potential gap fill here. Now, if we gap down below 110, I mean, we could be in big trouble. Could be trying to hit the lower 100s, which a lot of people I think are going to start bailing. As long as it holds like this area, I feel like investors are going to say, hey, we're going to be along for the ride. We're just going to chill. We're just going to relax. But anything below, I mean, it did get bought up here down in the 103 area. We had a nice rally, but that got sold off again. So confidence may be a little low. Now, one thing that I was kind of thinking of is, it's been a while since we had any consolidation. We could potentially be in, if we look at the range here, we could potentially be in a consolidation range where 320 and 350 is the range. Now that's a pretty wide range. That's almost a 10% range that we're trading in up or down. But this would be, I would say, fairly a very safe way to trade if we can maintain this range. Now, we know the top is around 350, bottom is around 320. So if we break to the upside, that would be good. If we break to the downside, that would be obviously be bad. So I'm watching to see kind of what the ranges are. But right now, what I see is the range right now that is established is around 320 and 350 area. Obviously, it may push the upper side and push bearish to the limit. Obviously, it also could do that to the downside. It could come into 315, bounce back up. So I would actually like this. And I think for bulls, this would probably be the best option is if we can maintain this consolidation area, just kind of ping back and forth for the next few months and then have a leg up. I think that would be the best case scenario. But, like I said, I think this election is going to determine a lot. I mean, when Barack was elected, when Obama was elected, market was down 3.5% the next day. So we don't know. We don't know. We don't know what the market wants. We don't know what the market is going to do, or if there's even a winner or not a winner. So we don't know. What we do know is what the price is and how the market is moving with that. So focus on your entries, whether you're long or short. You can make money. Today you could have made money long or short. Today, yeah, the easier money today would have been to make money long, but I did make money going short. I mean, it is what it is. So just be very careful. Don't get too aggressive. There were some people this morning who were posting massive losses just because they were shorting this major rip up. Like, just go low and slow, keep your risk low. Now is not the time to be your hero. You don't want to go in and just be like, oh, I'm just going to buy this, I'm going to short this, because you're going to get yourself in trouble. You're going to be in over your head. And, there's going to be a lot of volatility for the weeks to come. I mean, even after the election, we still have a potential stimulus deal. We have, there's a lot of things going on. There's the China trade war. I mean, there's things that are happening. We still have a rampant coronavirus. States are being shut down. We don't know. We don't know what's going to happen in France, UK, Greece. They're all being shut down. I don't know if that's going to happen to us or not, but let's focus on one thing at a time. There's going to be many catalysts to come. We're still in earnings season, so there's a lot of catalysts there. I didn't trade any earnings tonight because I just wanted to stay low and slow. If I do put on a futures trade tonight, I'm just going to be, if I'm looking at the S&P, I'm gonna be looking at what this 33.80 range does. If it taps here, it looks like it's getting tired out, I might short it again around this 33.80. Obviously, if I am trading futures tonight, I'm going to be using very tight stops. I'm not going to just wing it. If I get stopped out, I get stopped out. It is what it is, and I can always re-enter. So just use proper risk management. Don't go crazy. Just relax. And if you watch this video to the end, comment watch to the end. And as always, stay safe, stay green. It's us versus herd.